Hey guys, it's Rich Prosser with Spokane Home Guy and One Property Network. Again, joined by Mike Hogan with Chimney Rock Mortgage. And we are on site at No Lie Brewery with the beautiful Spokane River in the backdrop. So hopefully you can hear us over the music. We did not account for that. And I'm just going to get out of the way, man. Like, I'm having a pistachio IPA.
Yes, you are. Of course, you are.
It's like the pumpkin spice of beer, and I'm basic, so we're just gonna leave it there. So anyway, but what we wanted to chat about today is really the other side of the coin, and that is like, what if the rates do not drop? Everyone's predicting like, oh, rates are going to come down, but what if they don't, and how does that impact like the decision making process?
Well, it's kind of like, what if this is as good as it gets? I mean, interest rates now are probably a point higher than everybody thought they'd ever be this year. So to me, what if this is the new normal? Then since you can't shop rates, maybe this is the time you should be looking to buy a house. There's not as many people that are competing. If rates were to go down to 6%, you'd be competing with a lot more people. And what happens if they never go back to 6%?
Right. Yeah, because I mean, like, from a real estate perspective, we haven't seen prices drop down. We've seen rates, nearly double in a year, and maybe a little bit more than double in a year. But we have not seen prices go down. So ultimately, at some point in time, a decision is going to have to be made of, do I need more space for the child I'm expecting, or do I downsize, upside, whatever. So from a finance perspective, like, let's just say rates do not go down. So how do we combat that? I mean, obviously we can deal with it.
Well, I think there's certain things we can do, as far as looking at getting creative with buy downs and some of those sorts of things, a temporary buy down, which can help you lower your payment for a 3-year period, or a permanent buy down that can help you lower your payment forever. But I mean, it's awfully hard to time the markets, and considering most mortgage rate experts are saying rates are coming down, and they just haven't. Inflation's been stubborn. So to me, I don't think that's something you can time. So, using the excuse of, well, I'm going to wait for rates to come down. Once again, what happens if they don't?
Well, and really so let's just take it from your perspective, because I don't want to be the biased realtor that's like, real estate's the greatest asset in the world, even though it is. But like, what if prices don't come down? Rates stay the same, prices don't come down. Like, what's your advice on the lending side to somebody?
Well, I mean, the reality is in my opinion, the sooner you enter the real estate market, the better off you're going to be. I mean, I didn't enter it till I was almost 30, and kind of wish I'd entered it when I was 23 years old. The houses continue to appreciate, and you'll never have the equity to make that big jump if you're continually waiting for something you can't predict. I mean, we can't predict what rates are going to be, and no one can. So to me, if you're looking to buy a house, it's the right time to buy a house based upon your needs.
Yeah. So it's definitely a needs-based decision, basically, which is going to change the financial decision. And what we talked about last month is, well, it does 100% of the time when you're going from maybe an apartment to a house, or a 2-bedroom home to a 3-bedroom home, and so on and so forth. So it always is a more expensive decision when you're choosing, when you have a need that involves really a life decision.
Well, yeah, but so are all investments, right? I mean, if I was to buy Apple stock today, it's taking money out of my checking account and writing a check that I didn't want to write, or I did want to write. So, I mean, housing is an investment. It's a good investment. And, fundamentally speaking, outside of real estate, what is somewhat recession-proof?
Well, I love what you said is, like, it's more expensive than the day it had its IPO or whatever. As far as Apple stock, it gets more expensive as time goes on. But at some point in time, I mean, like, you still think it's a good buy. You still think it's got an opportunity to earn you some money, or, as an investment is concerned. So, what I would say is, in our market, it's definitely a needs-based market. When you're speaking with a lender and your agent, strategize on ways that you can make it more affordable. And actually, if you follow us on social media, like, we're going to go over a few things like that you may not know about mortgage, and some pretty exciting things that, one exciting thing in my opinion that Fannie Mae is doing. So watch out for those. And as always, 990-SOLD. If you want to reach any of the agents from Spokane Home Guy.
Or 747-1300 for any of the loan officers at Chimney Rock.
Awesome.